If you were offered an opportunity to invest $1 billion into a tech company, would you take it? Well, that might be a chance for some lucky investors because Figma is preparing for a $1 billion IPO, but before they can raise all that money, they have to convince investors like you and me to buy their stock. So are they worth $1 billion? Let's unpack this. But first, if you appreciate the insight and analysis that goes into making a video like this, it does help out tremendously if you show your support. So thank you guys so much. Alright, let's get into it. Figma is a collaborative interface design tool with a real-time editing feature that allows multiple people to work on projects simultaneously. Founded in 2012 by Dylan Field, the startup has grown exponentially over the last few years. In fact, in their latest funding round, they were valued at $10 billion. Some of their most notable investors include Tiger Global, Index Ventures, and Addition. On June 22nd, Figma filed for an initial public offering of 1 million shares at a price between $40 and $46 per share, which could raise approximately $1 billion. Now that is a huge amount to be raised from an IPO, but will investors be able to stomach the price? Well, in order to answer that question, we need to look at how the company has been performing lately. In 2021, Figma reported a loss of $249 million on $170 million in revenue. However, in 2022, they narrowed their loss to $158 million on $174 million in revenue. That means that even though they have yet to turn a profit, they are on the right track. One thing's for certain, if they can continue to grow their top line while reducing their losses, they'll be in a great position to go public. But what do their financials tell us about their future prospects? Well, Figma's audited financial statements show that they increased their annual recurring revenue, or from $57 million to $136 million from 2020 to 2022, a compound annual growth rate of 122%. Plus, they boast a net revenue retention rate of 116%, meaning that the company has a strong base of recurring revenue and is growing its customer base at a rapid pace. Additionally, their non-GAAP gross margin increased from 67% in 2020 to 71% in 2022, and their cash flow from operations was positive for the last 2 fiscal years, which is a good sign that the company is generating cash and it is not just spending money. So what does all this mean? Well, simply put, it means that Figma is a high-growth company with a solid foundation. But will that be enough to convince investors to buy their stock? Well, according to analysts, Figma could be worth up to $13 billion after going public, which is more than double their current valuation. That means there is a lot of potential for growth and upside for investors. However, there are also risks to consider. For example, Figma operates in a highly competitive market with other players like Adobe, Sketch, and Webflow. Additionally, the company has yet to turn a profit and may not be able to do so in the near future. And finally, the IPO market has been volatile lately, and there is no guarantee that Figma will be able to raise $1 billion. But if they can address these concerns, then they could be on track for a successful IPO. And here's something else to keep in mind. Figma's IPO is scheduled for July, but investors must make their decision before July 31st. This means that they need to carefully evaluate the company's financials, growth prospects, and risks to determine whether or not it is a good investment. So what do you think? Is Figma worth $1 billion? Do you think their stock will be a good investment? Let us know your thoughts. And don't forget to stay tuned for more updates. Now, this is not financial advice. All the information provided in this video for educational and entertainment purposes only. Do not make any investment decisions based on this video. Do conduct your own due diligence and consult with a financial advisor if necessary. Thank you for watching.